Alright, what is up YouTube? Welcome back to Stacks at Bat the Numbers, and today is Thursday, and of course we have more earnings coming out today, but one of the smaller stocks that we've been kind of keeping an eye on, tracking here in this long-term downtrend for several months now, just kind of hoping that management is able to turn it around and the company's finally able to post us some positivity today after market close. Just doing a quick update here on STEM Inc., ticker symbol STEM, listed here on the New York Stock Exchange. Now, this stock obviously has been in this downtrend. We came down, we slightly broke below this kind of all-time support trend line, really, and you can see we rebounded recently in the last couple of days, got up slightly above this trend line. You can see we came up to retest that 20-day moving average right there, and now you can see we had a slight rejection. Stock right now hanging out below the trend line, still have a little over 2 hours to go, so for all we know, we can potentially gain a little bit of momentum. Some volume can come in the last 30 to 60 minutes if anyone decides at the last moment they want to play earnings on STEM. But right now, stock's at $1.87, it's up 1 cent, 0.8%. I'm not going to dive into the fundamentals because we've had multiple kind of overviews of this stock. I did a handful of updates over the last several months, so we kind of know how I personally feel about this company. Again, conservatively, I could easily make the argument for $3.50, potentially $4. Again, that's being conservative in my opinion. I drew out some higher trend lines several months back, and I thought we would potentially kind of keep going, but what's going on is these earnings overall have been mixed, and that's my initial point that I have to go back to, right? Everyone looks forward to the earnings because we've even seen situations, again, it doesn't always have to come down to did they beat on EPS and revenue by 10, 12%? It doesn't always have to be something extreme like that. We're seeing multiple situations. Perfect example, stock like Oracle. Look at Oracle, how it's been on the up and up. And if you go back, you can see the company in the last couple of quarters has actually been posting some light revenue and light EPS numbers. But what's happening? The company is continuing to forecast further growth, further increase in demand, so the stock is either stable or continues to grow. And something like STEM, we kind of have a similar situation, but we're not really seeing it in the numbers as of right now. And if we go back several quarters, we can see that the revenue does bounce around over the quarters. We know this, right? The EPS has kind of been all over the place as well. And right now, in the current state of the stock, the revenue is important in my opinion, but also we need to make sure that we keep the bleeding in line. So even if revenue comes in decent here, we're expecting a loss of 21 cents a share here about for earnings today after market close on revenue of 66.67 million. So if this company, let's say they post like 68 million and they beat on revenue, good sign, right? But at the same time, if they lose like 24 cents a share, in my opinion, they may drop them back down towards this bottom trend line and could even potentially have them come down to a new 52-week low here of sub 146, of course, pending what the company tells us. Because we've seen as of late here with this company breaking down to new lows, it's not really the future demand that Wall Street is, they're not taking that into account, right? Because even when I did the update, they recently said the backlog almost doubled and went from high like 900 million to almost 2 billion of a backlog. So we know the orders are there, right? We know the demand is there. So saying something like that, in my opinion, just seems kind of irrelevant. So what is relevant? Well, what's relevant is we go back several quarters and we can see big miss on the EPS side, missing by a chunk on the revenue side, but you could make the argument that they kind of came close. And now you can see next quarter again, they happen to beat. This was basically this time last year. Wait. Yeah, that was this time last year. And we can see essentially what I just said, right? The company came out, they beat on revenue, had the big miss on the EPS side. So what happened? What happened was, because it was technically a beat on one line, we got some positivity and the stock began to rage up to about 7.5 from like this 3 3/4 mark. This was actually, I think, kind of around the time we first looked at it, maybe? I don't remember, but I do remember this move. And I remember saying to myself, like, wow, this stock could really move if you can find yourself, if you're able to really step in towards a bottom here and accumulate at a good low price, you can really catch a nice bump and make a nice return. Whether it's short term or long term, right? Because I personally had high hopes for the stock. But we can see that because of the big miss and the wider loss, you can see the stock raged, got up, and then just kind of immediately gave it back and went even lower and made lower lows than it initially had. Reason being is because, in my opinion, it's waiting for that stability, right? And even during this time frame, you can see a beat on the top and bottom lines, and it didn't matter. The stock continued to fall because at 7, you could potentially make the argument that the stock was overvalued. Right? So from this point, if we went from low 3s up to like 4, 4.5, the stock after these earnings here may have just kind of remained flat and not completely sold off. But because it ran so much, it had to start pulling back. But now people were kind of mixed here going into these earnings here in November, and we can see big miss on the EPS side, posting a loss of 49 cents on estimates of 17. And of course, the revenue missed by a chunk. Boom, stock goes down. We're bouncing around, a little bit of a rebound, a lot of selling pressure coming into next earnings. We look at last quarter's earnings, and again, we have a wider than expected loss, and we have a big miss on the revenue side by over 90 million. So, in my opinion, yes, the revenue is key, but the EPS, the losses have to come into check here. And unfortunately, we know that earnings are 100% a gamble. And, anything can happen. And sometimes we get light numbers, but we get a positive reaction, like we saw with Tesla, of course, one of every trader's favorite stocks. But also on the flip side, we've seen situations, look at something like an eBay that we spoke about just yesterday, reported earnings. They beat EPS and revenue estimates, but slightly lower forecast moving forward, boom, stock takes like a 6-7% hit or whatever happened. So we know that even when we wait for the earnings and the numbers could potentially be viewed as good or positive, we can still have a big pullback. So unfortunately, it is kind of up in the air. And I know even if you go on, like StockTwits and you'll go to these websites and look at all the threads to see what actual individual investors are saying, right now everyone is extremely upset with the management team themselves. People are not able to connect the dots, especially when we speak about how much where the company came from in terms of revenue to get to this point, and now, like I mentioned, the backlog doubling to almost 2 billion. And so now people no longer want to be in wait and see mode, right? Now they want to see it. There is no more time for waiting. That is the issue here with STEM. So that's why I'm saying the initial reaction may not seem that drastic if they happen to miss one of these estimates. However, I think that, in my opinion, even if we have a beat on revenue, but a wider than expected loss, where either A, going to drop, but then the losses will accelerate actually several days after today, or on the flip side, almost similar to what we had kind of here. Well, not really. It was here. And we can see that we had the revenue beat, but the EPS beat. So we had a big run up, and then everyone just kind of took profits and then jumped on the short side, right? So it was very short-lived. And when we're talking about a stock like this, an investment for the longer term, what you want, in my opinion anyway, is you want a stock to kind of run up, and then even if it sells off a little bit, you want it to stop, right, at that previous little consolidated zone, and you want it to kind of maintain some value. That's why when a lot of people bring me some small cap stocks like this, those are the few things that I personally look for, right? We came out with numbers. All right, then let's say the numbers were decent. The stock started to run up. But if it immediately gave it back and then made newer lows and lower lows, then the big money, the smart money, in my opinion, would basically be telling you that that is not the true value of the stock. Right? Because if it really deserved that run up, it wouldn't have immediately given it back. It would have held some stability and some value moving forward. It wouldn't just immediately sell off. So, like I said, in my opinion, this quarter here may potentially be the make or break for STEM. I mean, again, I was looking for this quarter and maybe next quarter as well, giving them enough time to potentially kind of right the ship and get back on track. But I have a feeling here that if the company posts some mixed numbers, again, I think that any pop or rally may only be short-lived, or they may just immediately start tanking the stock. People may wake up and they may just say, you know what, I bought this thing back here at like $6. It hasn't done a freaking thing this entire time. They consistently keep missing earnings. Like, management doesn't give, two shits. And at the end of the day, I'm just going to inevitably keep losing money, and they're just going to keep dragging it down into the mud here. So I think that this is why I'm saying, in my opinion, I think that this is literally a make or break quarter. Because if people see, again, another earnings miss, I think a lot of people are going to jump ship. And I think we may see, like, even this fib here, 134, we may see the stock hit new lows. Now, if they happen to beat, which of course I'm pulling for, because again, I know a lot of you have held this for a while. You're looking, like I said, at the $2 billion backlog. So you're seeing what could potentially happen 2-3 years from now. And of course, I respect that outlook. But again, the problem is the company has to actually deliver. And if they do deliver, in my opinion, we can probably immediately get up to like where we first started really chunking down below these trend lines, maybe like right around here, like 2.5. And then if the numbers are decent, and because we sold off so much, even if we have a run up to 240, 250, we could potentially sell off, maybe retest this fib here or this trend line at about maybe 215. And then technically we should probably bounce and run up to the higher trend line there. You can see like, 2 3/4, 280 and change. So in my opinion, we have the opportunity to see some drastic percentage gains on STEM here in the very, very immediate short term. But unfortunately, it is all up to the company. And it's rough. Like I said, especially for me, it's rough. Because you guys know I favor the fundamentals. When we're talking about long term, I'm favoring the fundamentals a little bit more than the technicals. Because I'm sure we can agree, when you're looking at charts and you're trying to like find a pattern over the last week or two, that tech analysis is probably going to help you more in the immediate short term for these scalp trades or a quick option trade, right? But in the long term, when we're looking for an actual investment, in my opinion, you want to look at the fundamentals. What's the current PE? What's the forward PE? How much are they making per share? Has the EPS, been growing or has it been shrinking or flat? What's the beta on the stock? How volatile is it going to be moving forward? How have earnings been? Is revenue consistently growing? Have they plateaued recently in revenue over the last couple of quarters or the last couple of years? Are they potentially losing market share to a new competitor who has emerged into the market, right? So we have to take like all of these things into account when looking at the overall business. Steam friend, my apologies. So that's why for the longer term, I like the fundamentals. But overall here, again, sub 300 million market cap. You guys know I like it. I'm not going to beat this up too much. But we'll switch over to stock charts. And we can see, look at this RSI, literally dead center of our benchmark road here between 30 and 70. Again, usually if an RSI approaches 30, sub 30, people make the argument that the stock is now oversold. And if we hit the 70 or above benchmark, we could potentially make the argument that a stock is overbought and has potential to now start selling off. But we can see STEM here on the daily, literally exactly middle of the road. But in the technicals, we had this big run up. Now we're kind of consolidating downward. This is why, in my opinion, even in the technicals, it looks like it wants to pop higher, but it needs the numbers in the fundamentals to back it up. Otherwise, they're either going to keep it flat or bring it back down here to the 140s, in my opinion. But we did have this low and then spike up. The high today was $1.91. Stock right now, 186. So not exactly getting back to the top of the range. But then again, I mean, it's not really a bullish hammer. But regardless, earnings are coming out. So that doesn't matter, really. But in my opinion, if these earnings are good, I mean, we can easily see like a 10-20% pop getting us back up to like the 220 range potentially. The MACD has been kind of slightly climbing, even though the stock has been stepping down. But again, in my opinion, these earnings are key right now. And the stock has really been getting beaten up over time. So again, I know a lot of you are involved, so I'm really, really hoping that they're able to post a good quarter here finally and, turn this ship around. But on the weekly here, RSI down here, just a touch below 37 towards the lower end of the range. And that's what I mean. See how we had multiple bring downs and bounces? Look, the stock hasn't even gotten above mid-range on the weekly since November of 22, really, if you look at it, right? And I know a lot of people are like, wait, how is that possible? Don't they swing like up and down to the top of the range? Yeah, a lot of them do. But on the flip side, a lot of other companies are occasionally hitting earnings, right? I mean, you have your hits, you have your misses, but STEM, for the most part, has been a lot of misses. This is why you're seeing consistent rejections off the mid-Bollinger Band. And again, as soon as the RSI even hits 50 and the stock shows a little bit of life, that's when the short sellers and the put buyers begin to hit it because they know it can sell off and drop down, which it has been doing. So anyone who bets against it at the top of the range has been making out like a bandit, right? So now, almost kind of similar, but not really, but almost similar to like what we just saw with Enovix, right? Enovix could have made the argument it was overvalued. The stock was just in this long-term kind of sell-off channel. Everyone's wondering, where's the low? How can they beat it up this much? When's the U-turn going to happen? And then what happened the other day? The company came out, they beat on the top and bottom line, and on top of it, they got that new order. So that is literally what the stock was waiting for. And that's why you just saw that stock go from 6.5, wherever it was. Now it's up to like 9.5. Having a great day, it's up like over 40% the last time I looked at it. But you understand my point. So if you want STEM to go from 180, double, and get to 350, well, guess what? The company actually has to do its job. And they have to narrow those losses, post good revenue, beat those estimates, and get that positivity coming in. And then we can have analysts and other institutions come out and, up their rating to an outperform rating, or now instead of neutral, they're giving it a buy rating, or now instead of a $2 price target, now they upped it to $3.50, right? These are the types of positive catalysts that we need to start seeing for STEM. And until the company actually does its job, unfortunately, you're not going to see it. But I really am pulling for you guys and for this stock because, again, I personally like it in the fundamentals. That growth in the backlog is actually really impressive. So I'm hoping for everyone's sake that the company is actually able to do its job and, get a good beat here. And look, we can see, even looking at the daily here, pulling up the pivot points quickly, you can see, look at this next resistance level, 223, right? So that's literally what I said before. We can easily pop into the low twos, maybe around 2.25, if we have a decent report here today after market close. Again, a little less than 2 hours coming up. But unfortunately, there's really not much to be said here. And again, we could have our pop into the twos, getting above some trend lines here, testing some fibs, or we could potentially have another light disappointing quarter and we can pull right back to about 1.5 and maybe even get beaten up even more because, again, I have a feeling that if they don't turn it around soon, I think a lot of investors may just get impatient and may just jump ship. Regardless of what next quarter we promise we're going to turn it around. It doesn't matter, right? With any stock, an investor will eventually reach the breaking point. So if you want to try to make the argument like, no, sir, please don't sell the stock, we're going to turn it around. It's like, yeah, listen, that's great, but you kind of been saying the same thing like every 3 months. And, I've been holding the stock for like 1.5 years, 2 years, and all I've done is lose money. So I'll tell you what, you turn it around on your time, and I'm going to go ahead and just, bite the bullet, take the loss, and move on and find something better. So that's my point. That's why if they miss these earnings, in my opinion, I think we see new lows. I think we see 134. If they beat 2.25, in my opinion, and hopefully, again, now more new money will come in. Oh, that STEM stock that got beaten up. Oh, wow, they just beat earnings. Oh, okay, now I'm going to step in. Now I'm going to buy some because now even though they're at 2.25, 240, 250, now they're actually doing good business, beating earnings. So in my opinion, over the next couple of months, we could easily probably see, 3.5. And new people are going to see new value here. You understand? So again, pulling for you guys. And unfortunately, we know it's all up in the air. It's out of our control. But I'm really, really hoping that the company posts some good numbers and you guys get a nice little rally coming into STEM Inc. Again, symbol STEM on the New York Stock Exchange. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, right? And of course, subscribe to the channel. That is our handshake agreement. That is literally how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You guys have a good day.